Alright, hey everybody, welcome back to the channel, welcome back to the blog. As one of my favorite YouTubers, Stradman, loves to say, welcome family, welcome back. Like, this is what he says.
Ladies and gentlemen, good morning, welcome back to the channel, welcome back to the vlog.
Yeah, I like it, I love watching YouTube videos. I don't know, if you like watching YouTube videos, hit the like button down there. You guys, in today's video on Young Money Investments, we are going to be talking about the top 3 stocks that I am buying for this week. August 11th today is a Sunday, getting the week rolling off right. We're going to talk about the 3 companies that I am interested in swing trading for this week. As you know, during the summertime, we are swing trading a lot more than shorting these companies because the volume is not there in the penny stock market. Now, this is actually a great time for a lot of you newer investors to be getting involved in Young Money Investments because swing trading is a lot easier, less time consuming, and gives you a little bit more pace. It's a little bit slower pace is really what I want to say. It's not as fast paced as the penny stock market is. You can take a little bit, there's less, I would like to say there's less risk involved. And if you do make a mistake, the moves are not nearly as large as in the penny stock market. So if you're here for the first time, great, hit that subscribe button. If you're not, if you've been here for a while, I'm glad to have you here. We're doing something a little bit different on this channel, and that is I'm going to give you all the picks that you need. I'm going to give you the report card of how the stocks went from last week that we were trading. That's the report card right here. We're going to talk about those things. But in today's video, if all you want to know is the top stocks that I'm trading, I'm giving it to you. Like, you don't even need to stick around for the whole video, but if you want to, and you want to understand what I'm trading, what my support and resistance levels are, where I'm planning on getting in, where I'm planning to get out, you're going to want to stick around for the whole dang video. So let's get this video rolling, and welcome to the channel. All right, you guys, like I was saying, I don't know what it is about these Sunday videos about getting the week rolling right and talking about the stocks that I'm going to be trading that just pumps me up like Arnold. I get super stoked. And so let's jump into this. Let's start off with the first one. All right, you guys, so as you can see on the board, we are talking about none other than Under Armour. That is the very first ticker symbol that you can see up here. And Under Armour is a company that performed very poorly when it came to what was going on. Basically, this was the charts, and this is during earnings right here. As you can see, it did pretty poorly. Sold off down here. We're currently sitting, we saw a little bit of a dead cat bounce, and we're sitting down here right at about $18 per share. Now, one of the things with Under Armour, about said Amazon, Under Armour that I really like is this double bottom right here, kind of holding right down here near $18. I decided to pull this chart up here on the 1 year. We're currently on the 180. Oh, we're on the 1 year. I thought we were on the 180 day. I'm pulling it up here on the 1 year chart. You can see a good level of support. Even if you were to bring this out over here, we've seen this level of support at $18 for quite some time, especially more in these more recent months, even starting down here in February. This would be January. So February on, we've seen a good level of support down here, roughly about $18.50 to $18. Now, yes, I do want to make a point here and go, okay, we are finding a little bit of a break of pattern, but it's still within that $18 mark. And psychologically speaking, you need to understand that when it breaks below like $18, then you need to be worried when it starts to go into like the 17 somethings. The reason I say this is because this is a little tidbit of information. Psychologically, traders are likely to trade based off of whole numbers. For some reason, when something says that it's 1789 or 1792, you associate that number with 17, whereas opposed to 1801, we're literally like 10 to 15 cents off, you associate it now in the $18 price range. So that's just a little human psychology tip of the day for you. All right, so my plan of attack with Under Armour, like I have been saying, is to buy this dip down here. If we pull up the 5-day, 5-minute chart here, my goal is to buy this hopefully somewhere right down here in that $18 mark. Now, if I'm not able to get filled down here right at $18, I'm not gonna cry. Depending on where the markets open up, if I can still get filled down here at 18.20, I'm going to be very happy to take Under Armour in this position. Now, if we do start to see this continually trending down, I'm going to cut abort, get out, jump ship, and I'm not going to trade this because I am getting in right at the very bottom. I mean, look at this, you guys. We pull up the 180-day chart. You can't get really much lower in terms of buying the dip and buying near support than doing this. We're not buying on an uptrending pattern. We're not waiting for it to pull back or anything like that. Like literally, you guys, we're buying down here at the very bottom. So if it breaks this pattern, especially, and I really want to zoom in here, especially if you're buying down in this, like you really leave very little margin for error. And that's actually a great thing as a trader. Your tolerance for risk is very minimal. You don't need to risk a lot. You don't need to risk 3-4% of your trade. Literally, you're risking like 0.25%. You cut your losses, you're out, and you go, okay, it's just not matching up with the pattern that I want. Now, I do want to say this, if it does continue to run up, you're getting in at the very bottom here and you're able to make a large win. All right, you guys, so when it comes to Under Armour, this is going to be my levels of support and resistance. We're going to be looking for support right there at that $18 price point. If it goes below that, drops into the 17s, we're cutting ship, we're jumping out, we're getting away from Under Armour. I'm looking for resistance first at $20.80. That's my first level of resistance. I'd look to take some profits there. $21.50 is going to be my next level of resistance, and then we're looking at $22 and $25 in that upper band. So those are the numbers that I'm looking for Under Armour. Oh, and one more thing I forgot to mention. Percentage of profit, we're talking about anywhere from our lowest band of 16% return all the way up to a 38%, you guys. 38. That offers some of the most margin of profit for any of these trades today. All right, you guys, the next stock we're going to be talking about is one that I have been hammering on this channel as of recently, and that is none other than ticker symbol EA. We've talked a lot about EA quite a bit recently, and this is a company that I am trading back and forth. I'm selling options on this company, whether it be puts or calls. I have made quite a good deal of money on this. Now, if you don't have a lot of money like I do currently owning and holding shares of EA, you're not able to do that. But I want to talk about the ways that you, yes, you, can swing trade EA. So let's take a look at the charts. All right, you guys, so as you can see here on the EA charts, you're probably looking at it, you're like, okay, wait, we saw it come up, we saw it pull back. Like, I'm looking at the overall pattern, Cameron. What's enticing about this? Well, my friend, let's zoom in here a little bit more. As you can see, we are seeing a consolidation. We saw another spike, and we're seeing it rest on this level of support that we have had for quite some time in EA. This has been a level of support for basically the past month, and so this offers, for me personally, a good buying opportunity. So my plan of attack and my goal here with EA is to be getting this somewhere right here down around the $91.50 mark. So $91.50 is my buy point. That is my level of support. Anything below that, you drop below $91, I'm gonna say cut your losses, take your 50-cent loss, get out, take just it's not worth it anymore. So we'll have to see where this stock opens up Monday morning, but I'm saying if you can buy it right down here around 91.50, you're in a good zone. Next question you're probably going to be asking, where is my level of resistance on this? I'm looking at about a 95.70. That's going to be right here, kind of where it peaked out previously as my sell point. I'm not looking for a massive trade on this. I'm looking to keep my gains very consistent, especially because I'm trading options on this. And I understand if you're not trading options on this stock, you're going to go, I want a little bit larger return. That's understandable, and that's why I give you options. I'm talking about what I'm trading. You don't have to trade everything that I'm trading, but this is what I'm trading. So I'm not looking for a massive return. I don't need to make a massive return, but I like the consistency. I like understanding this stock really well. And so if you do take a look at the charts here, we're talking about basically a return of about 4.4%, 4.5, 4.6. We're basically looking at anywhere between a 4.5 to 4.7% return on this. So nothing major, but definitely a very consistent pattern. I like that we've had the spike again, we've had the pullback, we've seen this over and over and over and over again on EA. All right, you guys, and the third stock that we're going to be talking about is none other than JD. Now, JD is a Chinese play, so this is a company that is based in China. If you want to look, so basically, you guys, JD.com is simply, it's known as Jingdong. Don't ask me why they called that company that, or 360 Buy. It's a Chinese e-commerce company headquartered in Beijing. It's also one of the two massive B2C online retailers in China by transaction volume and revenue. It's a member of the Fortune Global 500 and a major competitor to Alibaba. So very similar to Alibaba, it's an online retailer. They are actually a pretty good play next to Alibaba in terms of trying to get in the Chinese online retail space, in my opinion, but we're going off of the chart. charts, not the fundamentals at this current time where we're trading it this week. So with that being said, I want to talk about where I'm looking to find support resistance on JD. Looking for support right now at $26. We're looking for a resistance of $32 and kind of a safety sell at 30. We're looking at a return of about 12 to 19% on this particular play. Now let me show you the chart and we can talk about it a little bit more. So if we do pull up the chart here on JD, this is going to be the 180-day chart. Let's actually pull it up to the 1 year and you can see why I think that this pattern is so consistent. You can draw this line almost on the 1 year chart here and you can see where it has had support, and then you can also see where it has had a little bit of resistance right here. We come up resistance against this, finally able to break, and then we're seeing it where it has become again level of support, support, and support again. Now, one thing with this trade that I do want to mention real briefly, this trade is heavily going to be predicated upon what is happening with the trade war. With this being a Chinese-based company, you need to be knowing what's going on geopolitically, what's going on in the news, because that is what's going to determine what happens to this stock price. If for some reason Trump tweets something out, this stock will plummet because people will be pulling out and it's going to send it down. But if things play out okay, we are going to see a lot of positive things happening for JD where we should see a very large return. So going back to the charts here and taking a look at this 1 day, 1 year chart, like I said, we're looking at a nice level of support right down here at about $26. Even if you were to buy right in here, like I said, we're talking about buying obviously at 26 would be nice. Right now, I mean, that's a drop of about 4% we're missing out on. If you, for some reason though, are able to get it right in here, I don't think it's bad to pick it up at $27. 27 is not going to be horrible. Let's actually zoom in a little bit more on this 180-day chart. If you can still pick this stock up somewhere right in this range at $27, you're still looking at a very nice return of about 18% to the very top. Even if you're able to get out here, we're talking 12%. That to me is a very nice sizable return. And your downside is right there at about 3.4% to the bottom. I would not hold this much lower than where it had previously dipped. If you're holding it any lower than this like 25.40, I would highly just tell you like that's not like a smart thing to do. You really do want to get out. Anything below 25.40, you're in bad territory. But I think we've seen it dip below. If you're dip buying down in this area, you're not in a bad position, but really I would not go any further than 25.40. And you guys, those are going to be my picks. Those are going to be my top 3 plays, trades that I am looking at, where I'm looking to buy, where I'm looking to sell. I cannot give it to you any straighter than that. I do want to talk about my report card though. As you can see from my report card over here, I did very well in my trades that I called out last week. We're talking about trades here on EA. It offered and returned me about a 6.7% return. I ended up trading options on that and actually made right about 98% on my options trade. So I did very well on that one. AMD was another one that just blew all my expectations. I knew this was going to be a good trade, but I did not know it was going to be that good of a trade that it was. It was a spectacular 21% return. You can't be mad about that. Next was Alibaba. I ended up actually stopping out of this trade on Monday. I ended up not making any money. If you would have traded it from that time to basically like over a week's period of time where I would have gotten out, it would have been about a 5.25% return. Again, I did well on calling that one out. I didn't personally want to get back in it because I had better options in trading EA, trading AMD, and trading a few other stocks such as FIT. Now, this is one I do want to talk about because I did not mention it here on the channel. I did mention it in my private mentorship group, and that is one I made about a 6.8% return on. So again, great, not horrible, not bad. I would say I'm pretty happy with making 6.8% on anything on a weekly basis. So there you have it. If you have any other questions, if you want to get a hold of me, leave your messages down in that comment section. If you are trading something else this week, love to hear your ideas, your conclusions. What do you think about the trades that I'm making? And what are you going to do this week? What are your thoughts? You think we're going to have a good market? Think we're going to have a bad market? I'd love to hear more from you down below. And if you haven't done so already, hit that like button, hit that thumbs up, and also hit that subscribe, hit the bell notification. Helps out the channel tremendously. The algorithm does boost the channel a whole lot more, and I want to help more people. So I will catch you guys in the next video. Talk to you later. Bye.